I'm going to show you the best strategy that you can use as a beginner in day trading, and it is going to make you so much money. So this strategy, there is two things. There is liquidity and inverted fair value gaps. It's very simple, but you need to listen. So the first thing is liquidity. Liquidity is very, very simple. It is a movement up and a movement down, or it is a movement down and then a movement up. The high or the low that is created is then liquidity. As you can see, here is some liquidity, here is some liquidity, here is some liquidity, and the liquidity is valid until it is swept. So for example, as you can see back here, we had some liquidity, but it is no longer valid because price went under it, therefore it swept it. The same with this high. As you can see, this was liquidity, but price went above it and swept it. Price is incentivized to sweep liquidity because that is where a lot of people have their stop losses resting. If you want to learn more about liquidity, my recent video was on liquidity, so go and give it a watch. Then we're going to be using fair value gaps. Now, fair value gaps is also very, very simple. It is a 3-candle movement. As you can see, we have 3 candles here, and it is simply the gap in the middle of the middle candle. So what you do for bearish, so that means for candles that are going down, you use the bottom of the top wick to the top of the last wick, and that is a fair value gap. And the same with going up like this, it's the top of the first wick to the bottom of the third wick, and that is a fair value gap. Now, normally people will teach you that with fair value gaps, you need to trade the way that they're going. So if they're going down, you wait for price to go into the fair value gap and then to go back down, and you enter your trade here and you sell. And with here, you wait for it to come back in, you buy here and you wait for it to go back up. That is not how we use it. We are going to print, I promise you. Let's look at how we do it. So now you know what a fair value gap is and what liquidity is. How can we use that in the market? Well, very simply, you're going to learn as I show you. So if you are still confused, it is okay because you're going to learn as I explain. I promise you it will become a lot more simpler the more I explain. So what you're going to do is you are going to want to get into your session. I am going to be trading a London session, which starts at 8 a.m. UK time. Once we get into this session, I'm going to be marking out the high and the low from the previous session, which is Asian session. So what I'm going to do is I'm going to grab my tool and I'm just going to mark out the liquidity of the low and the liquidity of the high. So as you can see, we've got our liquidity marked out. We're now going to wait for the high or the low to get swept. And as you can see, we now have done that. We've now got the low that has been broken, so now this liquidity is now gone, it is invalid, and we are waiting to create a fair value gap. So what we do is we break it, as you can see down here, and we have created a fair value gap, which is the bottom of the first candle to the top of the last candle. That is now our fair value gap. So now what we're waiting for is for it to get disrespected, right? Like I said before, people are going to be waiting for price to come into this fair value gap and they're going to look to sell off it. We're not doing that. We are going to be waiting for price to come into it and close above it. We want the candles to come above it and close above, which will mean that it has disrespected it, which is why we're going to enter. So that's what we do. We wait. And as you can see, we get a nice close above the fair value gap, showing that we disrespected it. So we would enter a buy position here and we would put our stop loss just below the fair value gap, and our take profit would go at the resting liquidity on the opposite side, which is a high. Then you basically let the trade play out if it wants to play out. There we go. This is a little bit slow. And there you go. That is one example. I'll show you another example, but it is genuinely this simple. It's not easy, obviously, but because you need to be able to spot liquidity, you need to be able to spot fair value gaps, and you need to make sure you're entering correctly. You need to make sure that you're not entering too soon. You need to make sure you wait for a candle closure, okay? Because as you can see, if we zoom in here, this candle closed just kind of below the fair value gap, maybe slightly above, maybe slightly below. You're waiting for it to, be 100%. You need to be confident. So this candle here is what we would have entered off because this is definitely a close out of the fair value gap, showing us that we disrespected it. So that is when we would have entered. Let me show you one more example. And this example is actually from a trade that I did take today. This is the trade that I ended up taking today. So of course I marked out the high and the low from the previous session. And as you can see, here it is. And I was simply waiting for a sweep of liquidity from either the high or the low, and then obviously creating a fair value gap. So we swept the high, we didn't create a fair value gap, so I'm waiting. We then break a little bit higher, we create a fair value gap, Perfect. We've now got our fair value gap. Now we're waiting for it to inverse and we're waiting for it to disrespect. Let's see what happens. We're waiting. See, we've tapped into it and then we've gone back out. We're not entering, not entering, not entering. This is the candle that we're going to be entering off of. We then close below. We completely disrespect the fair value gap, which means we're going to enter, obviously. So we enter. Our stop loss is going to go just above the fair value gap, and the take profit is going to go down at the resting sell side liquidity. We are then going to play the trade out, and we are going to watch what happens, see how we get on. As you can see, a little bit of a retest, but eventually we do go on to smash our take profit. And that is the trade that I took today. Just remember not to enter your trades too prematurely and wait for a definite close below the fair value gap. And make sure that you're targeting the previous session's liquidity. If you're going to use this in London session, make sure you're targeting Asian session liquidity. And if you're trading New York session, make sure you are targeting London session liquidity. This will work on all pairs. So hopefully you enjoyed the video. If you did, drop a like, subscribe, comment down below what videos you want to see me make in the future, and peace.